Okay, and welcome back, students who are taking financial accounting. In this series of videos, we are working on the assigned homework problems for Chapter 5, the problems from Group B. And let's see here. Come on, slide. There we go. All right. Accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help you if you don't understand the underlying concepts. Go back and study the text material again and watch the 30 videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. And in the last problem, we when we had looked at 48B, we were computing based upon Lifo. And when we did 49, we were using average cost. Now for 50, we're going to be doing FIFO, LIFO, and average cost. Okay, so let me get my pen here. And it says here, Lakeside Industries completed the following inventory transactions during the month. So there's not too many transactions here. And requirements: 1, without resorting to calculations, determine which inventory method would result in Lakeside Industries paying the lowest income taxes. Okay, that's very simple. If you'll recall from the 30 videos, if I have first in, first out FIFO, the first ones in, are the oldest, right? So that's, they're the oldest, and just over the course of time, prices go up. Okay, so things that are older, I mean, let's face it, a loaf of bread, 50 years ago was 25 cents. Today it's $2.25. All right, so LIFO, on the other hand, which is the last in, first out, these are the newest, right? The most current, right? So they're going to be the highest prices, right? And average cost is an average in between. You can think of it as an average in between the two. So if FIFO is the oldest, right, which is the lowest cost, and LIFO is the newest, which has the highest cost, if we're thinking in terms of paying income taxes, right? Oh boy, did that wrong twice. Okay, if we're thinking in terms of the lowest in income taxes, well, what do we pay income tax on? We pay income tax on our profit. So if I have revenues and I have my expenses, okay, to get my profit or loss, well, in the revenue section, all right, remember we have sales less cost of goods sold, which gives us a gross profit. Okay, and then from the gross profit we take out the expenses, right? Well, this cost of goods sold is based upon the value of the inventory, and if we just throw in numbers, all right, let's say we have $100,000 in revenue, okay, and if we have our oldest prices being, say, 25,000 of cost of goods sold, that means our gross profit is 75,000. And then if we take out expenses, let's just call it 30,000 in expenses, that means we would have a profit of 45,000 that we would pay taxes on. However, on the opposite side of the coin, if we look at LIFO, and we still had this 100,000 in revenue, but now because our cost of goods sold is higher because the prices are higher, and let's say instead of 25,000, let's say it's 35,000 is our cost of goods sold. Okay, now we're talking about having $65,000 in gross profit, and we take out the same 30,000 in expenses. So now we only have 35,000 that we're going to, as a profit that we're going to pay taxes on. So, we're looking, just by thinking it through, all right, how we're going to pay the lowest in income taxes is based upon where we have the lowest amount of profit, right? Because it doesn't matter. I mean, if I have 10% of income tax and I'm just using a number, right, on 45,000, that's $4,500 in taxes. And if I pay 10% on this, that's $3,500 in taxes. Obviously, that's where I'm paying the lowest amount in income taxes. So without actually resorting to calculations, right? Yeah, I put in numbers here, okay, just to, and obviously I made things up. I didn't use the information from the data, okay, but in order to be able to think through it in your mind, I did plug in numbers here, in order to, illustrate why using Lifo will give us, will pay the lowest in taxes. But the bottom line is, because Lifo will have the highest cost, okay, having the highest cost means we have a greater cost of goods sold, which means we're going to have lower profit, and therefore we're going to pay lower income tax. All right, so that's the theory of it. All right, so that's number one. Okay, number two, prepare a perpetual inventory using Fifo, then Lifo, and then number four is average cost. So I reproduce this here, and we'll do Fifo first. And basically, and you should. I mean, I realize that you don't. You can get practice by doing this hundreds of times, okay? But in working through the problems and having studied the textbook, you should be getting this down pretty much by now, because it's just repetitive. If if you remember what you did for one, you should be able to remember what you did for all of them, okay? All right, so I start out with a balance of 35, and the unit cost is 90, so 35 times 90 is $3,150. Okay, that's my inventory on hand as of 8/1. On 8/4, we're going to purchase 70 at $92, okay, which is $6,440. So now we have 35 at 90 for 3,150, and we have 70 at 92 for 6,440. Right? So our value of our inventory at this time is 9,590. On 8/12, we're going to make a sale. Okay, we're selling 81 units. Well, if I'm selling 81 units, okay, what 81 units am I taking? If I'm using first in, first out, the first ones in were 35. So I'm going to take out the 35 at 90. And if I have 81 and I take out 35, 6 from 7 is, I need to take out 46 more out of this here 70, right? So I get rid of the 35 and I have to take out 46 from the 70, which means I will only have 24 left, right? So 46 at 92, right? So 35 times 90 is 3,150, which we know from right there, and 46 at 92 is $4,232. And so now our inventory on hand is 24 at 92 for a total of 2,208. Okay. Now I could have added these two together, 2,837, right? And if my inventory value, total inventory on hand was 9,590, if I subtract out the 7,382, okay, I'll come up with 2,208. That's my double check to make sure I'm doing the math right. Okay, so let me draw a line across here. Okay, so then on 8/22, I'm going to purchase 56 at $95, which gives me 5,320. Okay, so now my inventory has 24 at 92 for 2208 and 56 at 95 for 5320. So my total inventory is 8257. Okay. Right. And now I'm going to make an additional sale on 831, and I'm going to sell 44. Where do I get my 44 from? First in, first out. The first ones in are this 24. All right. So I have to take out 24 at 92. Okay. So if I need to take 44 and I have to take out 24, that means I have 20 left. So out of the 56, I have to take out 20, which will leave me with 36. So I have 20 at 95. And so that's 24 at 92 is 2208. And we get that number from right there. And 20 at 95 is 1900. Okay. And that means my remaining inventory is 36 at 95 for a total of 3420. Okay, so that's my inventory on hand. Right, so for my total purchases, I ended up with 126 in purchases, and the total value of those purchases is this 6440 plus the 5320, which gives me 11,760. For my cost of goods sold, I sold 81 and 44, which is 125. And the total of these four numbers, right, is 11,490. And of course, I have 36 units on hand for a total inventory value of 3420. Right, so that's FIFO. Now, I'm going to erase this. So pause the video and copy it down if you have to. But I'm going to erase this. But so just come back because now we're going to work on Lifo. All right. So if you're back, I have to erase out the pertinent information here because we're going to do Lifo next, last in, first out. Basically, it's doing the same exact thing as FIFO, except we're working from the opposite direction. So my beginning inventory on 8.1 is 35 at 90. On 8.4, we purchased 70 at 92, which still gives me the 6440. So we still have 35 at 90 for 3150, plus the 70 at 92 for 6440. This gives 0959. Okay. All right. So on 8.4, that's still the same, but now where the change comes in is where the sale is. Okay. We're going to sell 81, right? So we have to take, again, 81. Remember, we're doing Lifo here, last in, first out. So if we're going to sell 81, what are the 81 that we're going to sell? Well, the last ones in were the 70, right? So we have to take out 70, which means we have 11 left out of the 35 that we have to take out. So we have a remaining 24 in our inventory, 24 at 90, okay? Because we're taking out 70 at 92, which is 6440, and we're taking out 24 at 90, oh, I'm sorry, 11 at 90, which is 990. Okay, and so we have a remaining 24 at 90, which ends up being 21,600 is the value of our inventory when we make that sale. Okay, so we purchased 56 more at 95, which is 5320. So now we have 24 at 90, 2160 plus 56 at 95. So that's 5320. So the total value is 7,480. And then we make another sale, and we're selling 44 of those. So 44, and since we're using Lifo, okay, and we only need to take out 44. Well, the last ones in were the 56, right? So we have to take out 44 out of the 56, which means there are 12 left over. Okay, so we have 44 at 95 is 4,180. And that means our inventory now is 24 at 90 for 2160 and 12 at 95 for 1,140. Add those together, we get 10, 3. The total inventory on hand is 3,300. And so we're still going to have the same amount of purchases of 126. We're still going to have the same amount of the dollar value of 11,760. Oops. 11,760. We're going to still have the same number of units that were sold, 125. However, the value is going to be different. The LIFO and FIFO value is going to be different. So when we add these three numbers up, okay, we end up with 11,610 as a difference in our cost of goods sold. For the simple reason, FIFO, we were taking the first ones out. With LIFO, we're taking the last ones out. The last ones are generally at a higher price. So that's why our cost of goods sold is higher for LIFO than it is for FIFO. Okay. We're still going to have the same number of units on hand, 36, but this here dollar value, okay, is going to be different because of the difference, because of which units we were actually taking out based upon FIFO or LIFO. So just pay attention to those differences. Okay, so I'm going to pause here and go ahead and copy this down if you need. Pause the video if you have to, and I'm going to be back to do the average cost. All right, so hopefully you're back, and we're doing the average cost. So let me just do a little bit of this. Okay, I'm going to need that. Get rid of, oops. This is 125. And let me get rid of this. Okay. Okay, so now we're going to do the average cost. Okay, so we start out with our beginning balance, and of course our, our average cost is 90 because that's what all of the units are. But now we have 70 units. We're buying 70 units at $92 each for 6,440. So now we have in inventory on hand is the 35 plus the 70, so we have 105 units. But we're doing average cost, so we have to take the 6,440 plus the 3,150, 9,950 is the total value of our inventory on hand. But we have to take that 95.90 and divide it by 105 in order to get the average cost. and the average cost ends up being $91.33 per unit. Okay. And so now when we go to make a sale, we're selling 81 of the units, and they're at $91.33, right? Because that's my average cost. That gives me a total of $73.98. Remember, we're rounding all of this stuff, okay? So instead of having 105 units, now we only have 24 left because we sold 81 out of the 105. So we have 24 units still on hand at 91.33, and that gives me 21.92 as my inventory on hand. Right? Now remember, it's when we make, with Lifo and Fifo, we're always, taking, the unit price, the unit cost stays the same. So it's the dollar cost that makes a difference. Now with average cost, every time, when we make a sale, we're using whatever that average cost is, but whenever we make the purchase, we have to adjust that average cost. All right, we have to average that out. So when we purchase 56 here, we add the 56 to the 24, which means we have 80 units in stock, and 21.92 plus the amount that we're purchasing, 53.20, gives us 211.5 75.12. And when we divide that by 80, because we have 80 units, we're trying to figure out the average cost. So now our average cost is 93.90, right? It doesn't matter that these were $90 and then we recalculate it to make it 91.30. Every time we make a purchase, we reassign a new value to the cost, and that's why it's averaged. We're reassigning a new cost for all of those units that we still have on hand. Okay. So then on 9/31, we make a sale of 44, and they're at 93.90, which is 41.32 as our cost of goods sold. And if we sell 44 out of the 80, that means we have 36 left. Okay. So we have 36 at 93.90, which gives us a total inventory value of 33.80, right? So, from a purchase perspective, we're still at 126 and we're still at 11,760 is the value of our purchases. Okay, that's not going to change. What changes is, depending upon the method we're using, our cost of goods sold is going to change. Sure, we're selling the same number of units, in this case 125, but in all three instances, our cost of goods sold amount changes. All right. If you recall, if you've written it down, right, let me erase this here and I'll just rewrite it. For Fifo, our cost of goods sold was $11,490. For Lifo, our cost of goods sold was $11,610. But now notice, and the reason why our Lifo is higher is because, they're more current, which means generally they have a higher price. And for our average, we're someplace in between. Okay, in this case here, we're in between at 11,530. Now, is it exactly in the middle? No. Okay, don't take that as I can add. Don't take it as I can add 11,610 and 11,490. Add those two together. 10, 11, 3, 23, and divide by 2, get 11560. All right. See, it doesn't average out equally. All right. You can't just take an average FIFO and LIFO. Get the midpoint between the two. That doesn't work. You actually have to do all of the math and come out with, the correct cost of goods sold. Right. But realize that average is generally going to be someplace in between the two. Okay, and then of course now with the number of units, we're still going to have 36 units, but our dollar value of our inventory on hand is going to be different. Okay, so this was a good exercise in order for you to be able to quickly see the differences between all three. Okay, and try to get an understanding conceptual wise as to how they all are related. And when you're in the workplace, yeah, you're only going to be using one of the methods. You're not going to use all three. But if you're an accountant and you're going to be setting it up, you need to understand the differences between all three so that you can best advise your client as to which one would for them to be able to choose because of their needs. If they want to keep if they want to pay less in taxes, then they were going to want to um, use Lifo. If they want to, show that they have, more profit, then they're going to want to use Fifo. And if they just want to do, middle of the road, keep things easy because it's a small business and they don't want to have a lot of calculations going on or whatever have you, then they might want to consider using the average cost method when they're not concerned about, profitability or paying taxes. Okay. So that's it for this one, and hopefully, if you didn't, hopefully you understood it, and if you didn't, then, definitely rewatch the video, and if you still don't get it, contact an instructor. Okay, see you in the next video for the next problem.